Kimcho and welcome. My name is Brandon Wendell, and this is the Wendell Effect for the Indian markets. I'm going to go over my view of the upcoming markets for the week of 23rd April 2023. Before we get started, just to remind you that we are not registered broker-dealers or investment advisors. We're going to take a look at this information from an educational standpoint only, not telling you to buy, sell, or hold in particular securities. We're giving personalized recommendations. There is always risk of loss in the markets, no matter what. We can try to minimize the risk. We can never eliminate it. Past performance is no indication of future results, and we are not subject to trading restrictions, so we can have a position in a security or initiate one at any time. I would love to hear back from you. Please send me emails and any requests you might have to brandonwendell.cmt@gmail.com. You can also reach me at Twitter at TraderBW, and you can follow me there. I do tweet regularly on all markets. And if you wouldn't mind, please hit the like and subscribe. That helps me out quite a bit. And also you can get the subscription to follow us on a regular basis with the alerts in order to know when new videos are coming out. So last month has been kind of bullish, but somewhat mixed. You can see Infosys, HCL Tech, some of the technology services were a little weak. We also had some weakness over here in utilities, but for the most part, the Nifty held up okay. Performance was somewhat bullish. Last week, however, things took a turn, and we see that we had a bit of a sea of red, if you will. So quite a bit of bearishness here. Overall, looking forward for the next month, the Nifty looks a bit choppy. Over the last 10 years, we haven't had a whole lot of success. The average return is less than 1% for this month, so don't expect a lot of momentum upwards or downwards. It could be a rough trading month. Look at the Nifty weekly chart. Again, you see that last month, a little bit of red here. We kind of gave back everything we had gained the previous week. Or not month, it was a week. Last month was bullish, but again, the last week was very, very bearish, and we failed to move into bullish territory. So our correction from that move down might be over. We might be getting ready to impulse yet again to the downside. It's not going to really see acceleration. I doubt we'll get down to the 17,300 by the end of the week, but we should see maybe a small red candle this week. On the daily chart, you see it. We were moving down, but as we came down to the 17,615, we have bottom tails on the candles, which is some buying pressure holding us up. That's suggesting that our momentum is just going to kind of flatten out and be very choppy this week. So be careful with your trades. Be very selective. May need to trade intraday only rather than trying to pick longer term. Looking at the 4-hour chart, we did have a little bit of a bullish impulse, pulled back, and this is suggesting that prices may be a little bit bullish, but again, we couldn't get all the way through the supply zone on the first test with lots of momentum. So watch to see if we come up and retest the 17,800 highs that we had before, and we have less momentum than we had before, that would be a negative divergence, and that's the sign that we're going to collapse down towards 17,000. Okay, so that'll be your first warning sign if that happens. Now, if prices come up and retest the prior highs from the last week, and we have more momentum, then expect a breakout towards these targets. So keep an eye out for the momentum. Moving on to Reliance, you can see we overshot supply, but we couldn't get enough momentum to stay up. And the earnings just came out. We're obviously going to have the reaction to the earnings on the new open, but overall, we're looking pretty bearish, and we're likely to see some bearish moves back down towards 2220 to 2230 towards the beginning of this week. On TCS, we had a positive divergence. So even though we were trying to impulse down, we only got to the first target that I had projected. You can see it actually gapped there on Monday, went down again midweek, and is now bounced because we lost our bearish momentum. This is just a correction. Okay, we're not changing direction, becoming bullish on TCS. I expect that this correction is only going to bring us back maybe for the gap closure before we start sinking again by the end of the week. This target will be reached, but it's not going to be for a couple of weeks. But keep an eye out. We'll get a small pullback in the gap closure. May get to the top of this candle, as a matter of fact. That was Friday from the previous week before we start moving down on maybe Thursday and Friday. Moving along here, Infosys, pretty much the same. You can see we had that gap down, hit our target of 161.8% of the previous impulse. We had impulse, correction, impulse. Now we're on a move down. We're actually a little more bearish here than we were on TCS. And it looks as though our first target is 1116 to the downside, and then we have two targets overlapping. That gives us a high probability right around that 1021 area, 1030. HDFC Bank is on a little bit of a correction after a rally, but we haven't shifted into bearish territory. We're just losing bullish momentum. It looks as though we will still creep a bit higher, but we're probably not going to make it much above 1700 by the end of the week. ICICI Bank, same thing, but a little bit more bearish than what we saw on HDFC Bank. You can see we've corrected even deeper, 61.8%. Didn't change direction, but we definitely lost a lot of momentum. So we're likely to see just a small, slow move to the upside towards the end of the week. Looking at the bank nifty, you can see that 53% of the time over the last 15 years, we haven't really gone anywhere. 53% of the time has gone a little bit up, but not much. It's less than 1%. So again, just like the full nifty, the bank nifty doesn't look like it's going to give us much this week. On the weekly chart, we did bounce, but you notice while we couldn't get into bearish territory, on our rally right now, we're not getting into bullish territory. So we're likely to see some choppiness and sideways moves. We are correcting on the daily chart. Expect this to continue to correct. We're just going to drift downwards towards 41,800, maybe even a little bit lower by towards the end of the week, that 41,331. But honestly, I don't see it dipping that low. We're likely just to go a bit sideways and down to settle around 41,817. And on the 4-hour chart, again, it doesn't really help us too much. That 41,817, that correction is not too far away. We may try to push a little below that, but we're really, again, not seeing too much bearish momentum. But the lack of bullish momentum is troubling, and we're going to get caught in a choppy sideways move this week. So following up on a few of last week's trades, we had ITC. 100% of the time, it was supposed to rally in April. It did. Unfortunately, we ran out of time without coming back to get in. So it never pulled back for our entry, and we have to give up on that one. I'm sorry, that's what basically happened. There's the follow through. So this was the trade idea right here, and you can see it never actually pulled back. It just kept going. So it was very bullish. The only way to trade that would have been as it went sideways to catch the breakout, which was, that would have been difficult, either one of those breakouts. M&M also 80% of the time was supposed to be a very big bullish move. There's still some time left until the end of this move. It's supposed to be until 17th of May. However, this was the trade setup, and the follow through right now, you can see we barely pulled back. So if we can pull back to our demand, this is still a viable trade, it's still an opportunity. The other thing is it may just continue to go upwards from here. We have that small basing candle right there. You might be able to use that as a little bit of demand for a buy, but it's a lot more risky at this point. The demand down below is better, but unlikely to get touched. We might not be able to trade this. And as you can see, it's just going sideways. So for new trade ideas, we have HDFC, and 80% of the time from April 24th until June 2nd, we get a bullish move out of this. Basically, we're going to wait for this to pull back. Our entry area is 26.10.15 to 26.34.80, and then I have projections as targets 28.36 and 29.60. That's basically what I got for you for this week. If you got any questions or if you got any requests, please send it to me at brandonwendell.cmt@gmail.com. You can follow me on Twitter at TraderBDub. And if you wouldn't mind, please hit that like and subscribe, maybe even the alerts button if you want to. That really helps us out. I appreciate you watching, and stay in touch with me. Until next time, trade safe, trade well. Take care, everyone.